Welcome to Explain the Charts. Today, December 4th, 2025, we're diving deep into XAUUSD, or spot gold, a market that has seen incredible volatility and record-breaking moves. First, let's unpack the current news and economic events shaping gold's trajectory. Recent reports confirm a strong bullish bias for gold, primarily fueled by overwhelming expectations of a Federal Reserve interest rate cut this December. Market sentiment suggests an 88% to 89.4% probability of a 0.25% rate cut, a narrative reinforced by softer U.S. economic data and dovish comments from Fed officials. A weaker U.S. dollar, with the DXY index falling to a two-week low of 96.54, further bolsters gold's appeal, making it cheaper for international buyers. Moreover, the ongoing global risk aversion, evidenced by stock market jitters and significant cryptocurrency volatility like Bitcoin's recent 5.6% drop to $86,000, has driven investors into traditional safe haven assets such as gold. We're also seeing robust institutional demand, with central banks accumulating over 1,100 tons of gold in 2024, signaling a long-term structural support for the yellow metal. However, despite this strong bullish backdrop, profit-taking has been observed, with bullion recently retreating to $4,205 from its six-week highs, suggesting some caution in the market. Now, let's turn our attention to the charts and see how these narratives play out in price action. Looking at the daily chart for XAUUSD, we can observe a clear long-term uptrend starting from mid-2024. Gold began its significant ascent from the $2,400 area in July 2024, consistently climbing through the year and into 2025. Notice the powerful rally that materialized in April 2025, pushing prices from below $3,000 to over $3,300. Another strong leg up occurred in September and October 2025, culminating in an impressive all-time high of $4,378.85 on October 16th. This spike aligns perfectly with news of gold breaking through psychological barriers and hitting new records, driven by intensified Fed rate cut bets and geopolitical tensions. However, immediately following this peak, we witnessed sharp reversals on October 17th and particularly on October 21st, where the price plunged from $4,360 to around $4,092. This significant drop clearly illustrates the profit-taking mentioned in our news segment, as traders capitalized on the rapid gains. Since that major pullback, gold has found solid support around the $3,950 to $4,000 mark in early November, which corresponds to the dips being bought sentiment among investors. The market has since been in a recovery and consolidation phase, gradually climbing back above $4,100 and currently hovering around the $4,200 to $4,220 range. Let's zoom in on the recent price action using the 1-hour chart, focusing on the period from mid-November to early December 2025. Here, we can distinctly see the aftermath of the profit-taking from mid-November, with prices consolidating around the $4,000 to $4,050 levels. The resilience shown by XAUUSD to hold above these key psychological levels underscores the underlying bullish sentiment, despite short-term pullbacks. The strong hourly candles breaking above $4,100 and then $4,200 indicate renewed buying interest as the Fed's dovish stance becomes more apparent. On November 28th, we see a significant upward move, with gold closing near $4,218, further confirming this renewed strength. The subsequent few days, leading up to December 3rd, show gold trading in a relatively tight range between $4,200 and $4,230. This tighter consolidation suggests the market is digesting recent gains and awaiting fresh catalysts, possibly the upcoming ADP employment and core PCE inflation reports later this week. Now, let's drill down even further to the 15-minute chart to capture the most recent intraday dynamics from December 1st to December 3rd. On December 1st, gold initially pushed towards $4,250, touching a high of $4,264.38, which momentarily cleared the previously noted $4,245 resistance level. However, this was followed by a sharp rejection, pulling prices back below $4,230, indicating that while there's bullish momentum, significant resistance still exists at higher levels. The price action on December 2nd shows gold finding support around $4,163, then steadily recovering towards $4,200 and consolidating. This micro-level rebound from intraday dips demonstrates continuous buying pressure, preventing any sustained breakdown. As we approach the end of December 3rd, gold is trading precisely around the $4,205 to $4,208 area, reflecting a cautious equilibrium. The current tight range on the 15-minute chart indicates that traders are hesitant to make significant directional bets ahead of critical economic data releases. This micro-consolidation also highlights the battle between bullish conviction and immediate profit-taking after the recent surge. In summary, XAUUSD finds itself at a pivotal juncture. The all-time high around $4,380, touched in mid-October, remains a formidable resistance level. A break above this would confirm a powerful bullish continuation, potentially targeting UBS's forecast of $4,500 next year, with a high likelihood, 70%, if Fed dovishness persists and geopolitical tensions escalate. Immediate resistance to watch is around $4,245, which was recently cleared but also saw a swift pullback. Sustaining above it is crucial. On the downside, critical support lies at the $4,000 to $4,040 region, strengthened by the 50-day SMA. A breach here could trigger a more significant bearish correction, with a 60% likelihood if upcoming U.S. data comes in unexpectedly strong and shifts Fed rhetoric hawkish. Intermediate support exists around $4,160 to $4,190, where buyers have shown resilience. Traders should closely monitor the ADP employment and core PCE inflation reports this week, as these will heavily influence Fed policy expectations and gold's short-term direction. Any signs of a stronger U.S. dollar or a hawkish pivot from the Fed could invalidate the current bullish outlook. Conversely, further weak economic data or increased global uncertainty will likely propel gold higher. Remember, this content is for informational purposes only and not financial advice. Always conduct your own research before making investment decisions.